Larry, good to see you. I'm glad we get a chance to talk today because I would like to ask you about recent market volatility. Concerns about a cooling US economy led to a market rout recently, with the Dow down as many as 1,100 points. Stocks and treasury yields did pair some declines after service sector data came back in better than expected. We know volatility and corrections are part of this landscape. But Larry, I want to show you this FinViz chart. So this is a look at the S&P's 1 month performance. When we see this much red on the board, how should we be responding to this volatility?
Well, Aaron, it's scary, obviously, to see some
Yeah.
of those big ones, and there are a lot of red up there. But if you kind of notice, a lot of that red is with the big ones, the ones that's actually been carrying the market. When you see, Microsoft and Nvidia down 10 and
Mhm.
15% respectfully, and Amazon down 13, there's a lot of green on that board as well.
Yeah.
But having a good financial plan, we don't have to have the knee-jerk reactions. But you see that on a monthly basis. But if we pull up a year-to-date basis, we're still doing pretty well. I mean, there's a lot
Yeah.
of uncertainty in the market because the Fed's maybe not cutting as quickly as some people think they should be, and so forth. But overall, again, we just need to have a good plan. As you can see, it's not as bad as that week projected.
Right. I'm glad you bring this up because, Larry, you and I have talked before about the concentration risk in the market because we've seen a lot of success with these tech stocks before, but part of that correction that we saw was because 82% of the S&P right now is being led by just 10 stocks.
Yeah, Aaron, we've been speaking about this for over a year now, really,
Mhm.
is it's been very driven. Some of the AI, certainly Nvidia, a lot of the tech stocks, Meta, Alphabet, Amazon, all those companies have been doing extremely well. And it has been lagging on the 18% or the 82%, excuse me, that we see that has really been relatively quiet. But a lot of people think that's where the value is going to be now. When you look at some of the big firms there are 22 times earnings, where you're maybe 10, 12% earnings on these smaller ones. Look like we have an opportunity for a lot of growth there. We just need to be invested.
Right. Now, I want to ask though, too, because of course we see these headlines about the financial markets. It's generally about the performance of the S&P. How did a well-diversified portfolio handle this recent volatility?
Very interesting is that again, we actually have a toolbox full of products that we use. So we try not to be, just because tech has been I guess, the fancy one that's getting all the conversations around it, getting all the press, is if you have it well diversified, that it didn't do nearly as badly. I had a lot of clients that would call. Of course, we try to be proactive when we have this happen, but to say, hey, we've been diversified from the get go. And the old 60-40, then in 2022, a lot of people have said it's a 60-40 portfolio, 60% equities, 40% stocks dead. It's actually doing extremely well right now by having that pared down and taking advantage of some of those lower talked about stocks that have a lot low earnings but have potential to grow a whole lot more. It's
Mhm.
doing very well.
Good. So just to show you something that I thought was a little bit funny, on August 5th, I think it was last Friday when the market was down, I was on Google and I was typing in, should I? And the first thing that popped up as an option was sell my stocks right now. So clearly people were feeling very anxious, but what should we be keeping in mind during those volatile moments?
That's where again you plan your work and you work your plan. Is that if you have an advisor, you have a financial plan, you really are prepared for the ups and downs in the market. And certainly the media scares you as well. Whenever you have a bad day like that, the markets are falling. But if you have a good plan, I say again, just make sure you plan your work your plan, discuss it with your advisor. But we're going to we've got it priced in. We're prepared for those days.
Right. Well, and if you had sold on Friday, you would have missed out on that rally. You would have locked in your losses.
You'd have locked in your losses. That's absolutely correct.
Right. So having that plan is essential so we don't react emotionally. Larry, if somebody would like to work with you to create their own unique financial plan, how can they reach you?
They can give us a call or office that is area code 615-216-1048, or they can go to our website, which is www.sfawealth.com, and sign up there for come in and see us.
Great. Larry, thank you.
Thank you, Aaron.